The Magnificent Seven doing most of the heavy lifting for the NASDAQ. Amazon hitting an all-time high. NVIDIA gaining more than 4%. For more on the tech sector and internet stocks in particular, we are joined by Mark Mahaney, Evercore ISI, head of internet research. And Mark, you are seeing, the NASDAQ really picking up. And again, it's those big stocks that are doing it. Why don't we start with Amazon? Because I think that's your best long-term call for large caps. Is that correct?
That's right. It's our number one pick in the internet space.
Why?
Well, we think we had a little bit of an inflection point. So we think we have three fundamental catalysts this year. We're going to have the reacceleration in AWS growth. We're going to have the attainment of record high retail operating margins. And I think in that shareholder letter yesterday and in the interview with Andrew, I think we got a couple of new data points to that. And I think for the company as a whole, I think we're going to have record high free cash flow margins this year. So when you have that kind of come together, I think you get a little bit more of a re-rating in the stock. You put 25 times free cash flow on next year's numbers, and you get something like a 220 stock price. This could go to 25, 30 times free cash flow for an asset that can probably grow free cash flow at 40%. I think that's reasonable. You could get up to 250. So we think there's valuation support. Of all the internet stocks, there's very few dislocations left, frankly. But I think Amazon is still one of them, still high quality asset. It's our number one pick.
In terms of what you're seeing right now, just with AI and what that could mean for Apple, I mean, that's the stock that has been under a little more pressure this year. What do you think when you check those things out?
Well, I don't cover Apple, but AI and generative AI is the number one issue out there for tech companies, and I generally think it's a tailwind especially for digital-first tech companies. Most internet companies most of the high-quality internet companies have been investing in AI for several years. If I just pivot back to Amazon, I mean, this is a company that can win a couple of different ways. It improves products and processes on the retail side of the business. It helps the ad targeting, ad creation. That was kind of an interesting point that came out yesterday. And then on AWS side, the Gen AI revolution is not going to be televised. It's going to be on the cloud, and somebody's going to need to store it. Somebody's going to need to compute it. And AWS, is very hard to see anybody doing more compute, more storage with Gen AI than AWS.
The other huge advantage they have is the infrastructure they've built up just on the retailing side. I mean, Andy Jassy laid it out in his letter, the idea that they can deliver 7 billion items same day. I mean, that is something that's pretty hard for anybody else to surmount.
So there's two really key points here, Becky. One is that they built these moats around their business. I mean, this is their competitive advantage. It's logistics. They can serve an item that is, go from click or click to your doorstep more cheaply than anybody else can. And that means they can also do it faster than anybody else can, too. What an advantage. So you mentioned the 7 billion number, but now where you are in the kind of investment cycle, they're in harvest mode. So that dramatic investment cycle that really crushed the stock or really caused the stock to underperform for 2 or 3 years, you're on the backside of that now. So you're going to have that number that they gave out yesterday, that for the first time since 2018, you're starting to see the cost per ship or cost to deliver decline by about 45 cents. You're going to hear that again, I think, next year and the year after that. That's where you are in the cycle. That means that margins are going to be rising for this company. It's a great spot for investors to be in. You're on the other side of the investment cycle.